Before I ever sell an option, I always make sure to run it through this exact checklist. Let me show you. Yo, what is going on, Premium Chasers? I hope you are having a God-blessed day. Today, every single person is going to get a very special ebook, the checklist for option sellers that we're going to be going over in today's video. Even though some of this stuff, some of you definitely are already doing, make sure you watch this whole video because I believe every single person, right, should go through this checklist before selling any sort of option, because at the end of the day, one mistake, right, one trade that you don't think through fully can ruin an entire month's, if not more, of premium. So if you want this full checklist for yourself, you can print it out, do whatever you want with it. Drop a comment down below. I'll send it directly over to you. And while you're down there, hit that like button and that subscribe button. But let's get over the shoulder immediately and start talking about this. The first one is, are you selling in the right direction? So listen, I put this one first because I actually saw somebody in the group recently in our free Facebook group. Join us. The link is down below in the description. Network with other people, ask your questions, all that good stuff. And there's no such thing as dumb questions ever. But I saw somebody getting confused about like cash secured puts and covered calls and like interchanging the lingo with, and it just was, I know it could be a little bit confusing in the beginning, right? So that's why I always say stick with this stuff for a year and then just be consistent with it, because this is really creates a nice snowball effect for you with compounding growth. But the first thing is we need to make sure is, are you selling in the right direction? Your CSP, your cash secured put, right? This is usually, I like to sell when your stock is trending down or sideways. Typically, in an ideal world, of course, I want to be towards that bottom Bollinger Band area. But oftentimes, as you guys have seen with the live portfolio that we have here, I'll do stuff even when we're towards the middle of the Bollinger Band. But rarely you'll see me at the top of the Bollinger Band selling puts, unless it's a stock that I have a tremendous amount of conviction in, or there's some sort of strategy that I have, right? Which leads us to the CCs, the covered calls, right? So this is when we're typically selling these when stocks are trending upwards, or ideally towards the top of the Bollinger Band. Now, obviously, when we look at Bollinger Bands, and I'll just quickly pull up whatever chart I have here is Kraft Heinz, right? It's just going towards the middle. Now, obviously, Bollinger Bands and technical indicators, guys, nobody knows what a stock is going to do, but usually we see it, kind of hit the top of the Bollinger Band, retract, hit the bottom, go up. Now, of course, this is not, nobody knows what it's going to do, but it helps us maximize the best possible strike price for our covered calls and our cash secured puts, okay? That's really the best part about your Bollinger Bands, okay? Now, let's get into number two, and that is, what is the stock's position relative to its moving averages? Had this question come up recently as well. How do you look at your moving averages in terms of when you're selling your covered calls or your cash secured puts? Now, you guys already know I gotta keep it simple for myself, and I always do 200 and 300 day moving averages, all right? I always like to look at my 200 and 300 day moving averages. Some of you will look at like I do look at 30-day as well. That's my middle Bollinger Band line right here that you guys see, and actually Kraft Heinz like trading right at that like 27.90 mark. But with that said, you could see these two lines right here. This 30 is my my 300-day moving average, and my 200-day moving average is this red line around 28.80, right? So those are my averages. Why do I like to look at those? Because I am a long-term investor. Anything I'm selling options on, I don't mind owning long-term, because again, the biggest risk of selling options is you're being stuck hold the stock. So for me, if I'm going to sell a cash secured put, I want to get it in a stock that's trading below the 200, 300 moving average. Now, if we're in a massive bull run, sometimes that's not possible, right? It's slim pickings out here, right? So, but if I can get my cash secured puts at least at that 200-day, 300-day moving average for my cash secured put, I'm happy with that. If we're trading below both of those, that's even better. Now, obviously, the market has been on a tear, so those are a little bit more slim picking, okay? So, but those are how I'm using it, especially for the cash secured puts, right? Now, for covered calls, I'm looking, are we near recent highs, or what are kind of like the resistance levels that we're facing here, okay? And usually you'll see that, right? You'll see that when you overlay these indicators, your moving average, your 200-300 day moving averages, and your Bollinger Band. You'll see that there's some sort of resistance at certain levels. Now, depending how bad I want to sell my shares will dictate what that strike price is going to be. Because like, let's say right here, I sold it when it hit like 28. Let's just pretend it's a flat 30 for the sake of the point I'm trying to make here, right? And let's say we did see a lot of resistance at like $30 here, and it just wouldn't get past it. I have a couple options. Number one, I could sell the cash covered call for 30. Right, and that's gonna be, there's gonna be a decent chance of actually having to sell those shares, right, on the expiration date. Now, if I was like, you know what? I don't really want to sell my shares, but I still want to put them to work, right? Maybe I'll do the 30/50s, right? Or the 31s, right? Depending on how much I actually want to get rid of the stock, right? Otherwise, I would just be, like, for example, like I was speaking with somebody that had like a ton of Amazon shares, right? But they had them at like cost basis of like 20, but still wants to do covered calls on them. Well, what's your price to actually sell those? That was the way I like to look at them, right? You probably don't want to be even doing 0.20, 0.30 deltas. You probably want to be doing very, very conservative stuff like 10 delta, maybe even less, maybe look at weeklies, right? If you really don't want to sell those shares. And worst case, if you truly don't want to sell your shares, you want to hand them off to your kids, just don't do covered calls on them. That's the simple hack, guys, right? So that's how I primarily use that for my moving averages on covered calls. Next is checking the delta. Me personally, I like to be 20 to 30 delta, right? That's giving me a nice balance of assignment, risk, and premium, right? I want to have a good balanced portfolio as best as I can, unless there's something, again, I really want to get assigned. Maybe I'll go for the 0.40 delta on a certain stock if it's really set up nicely, and I want to just maximize my premium, and I actually love it at that price. That's the key, right? So obviously a lower delta means you're safer, but you're going to make smaller premium, right? Higher delta, you're going to get higher premium, but you're going to have more risk, right? Never forget that, guys. I say it in every video. There's no such thing as free premium. You are just simply taking on more risk, okay? You are simply taking on more risk. The more ROI on your collateral you're getting, the more risk you are taking on as an option seller. And you got to figure that out for yourself, okay? And that comes with time. I think that comes with time and experience, that you will see, hey, what works for you, what doesn't work for you. Some people love to be a lot more aggressive in this space, especially compared to me. I like to be, I've been burned so many times that I really try to be a lot more conservative with balancing and especially the stocks and ETFs I sell on. Fourth, most important, this should be number one, honestly. Are you comfortable owning the stock, right? Would you buy it outright at the strike that you're choosing your cash secured put? Right? Like, for example, just, Kraft Heinz here is our example. Would I buy it at $27 what I have my puts on? Would I own it at 27? Right? And I do have my puts on Kraft Heinz here, right? On here. So I have my Kraft Heinz 27 puts. Like, and would I be cool owning 100 shares of Kraft Heinz on that? Yes, I would, okay? And if I say no to that, then probably shouldn't be selling puts on now. Lots of you guys, I see it in the Facebook groups, and it's fantastic because I get to see what you guys are doing, right? Like I get, I get a lot more value from you guys, like, because I get to see what you guys are doing and what you guys are concocting up into. Like, you're doing plays that I would never personally do, but I love watching them because I'm like, oh, that's cool how it worked out for you or it didn't work out for you. I'm like living vicariously through you guys. So again, make sure you join our Facebook group. All these calculators and stuff are down in there in our Facebook group. And if you want the live premium tracker where you can really see how I'm doing my portfolio, this is free, but you got to give me just a little bit of your time to tell you about our Options Seller School Mastermind and Mentorship Program. That link will be the first one in the description of today's video. No hard selling or anything like that. I just know what this mastermind that we have and our mentorship program, if you're non-toxic and you're financially stable, it can benefit you so drastically. It's such an amazing group of people. Click that first link in the description. Let's keep going, okay? Now, what is your return on collateral? Let's go. That's the North Star. That's the golden rule, guys, right? Why are we doing this, right? If we could just buy, the S&P 500 and let it sit. Like, otherwise, there's no point in doing this entire strategy, guys. I think we know that. So what is your ROI on your collateral goal? Like, for example, when I'm older, right, and I'm like genuinely like retired and I plan to not work, for me, I plan to do this YouTube thing for forever because I actually enjoy it. Maybe it'll be slowed down or whatever for me at that time, but I've always enjoyed creating content. I don't know what that's going to look like for me, but in an ideal situation for me, I will primarily be living off of my investments. And a lot of people live off their investments during their retirement years. They have their 401ks, they're collecting Social Security, they have their Roths, right? Whatever it is, right? You're living off of that. Well, for me, I don't want to touch any of that. I want to give as much as I can to my children, right? I want to. Now, that's a whole topic of discussion, how much, blah, 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 blah. But with that said, I do want to pass on some money to my children while also enjoying, travel, whatever it is that my retirement years. But, asterisk, I don't want to, like, let's say, fictitious example, I have $5 million and I'm like, I don't want to pool principal, okay? I never want to pull principal ever. right? So for me, I want to be like, hey, what does my ROI have to look at so I never actually touch that principal? And I think this is where a lot of people don't understand when I say this, because they're like, oh, just put it in S&P. Well, I don't want to like just live off 4% and just take 4%, right? Like I don't want to do that. I'd rather get like 0.3% a week selling puts on SPY and covered calls on SPY, you know, capturing appreciation, all that, you know, interest, all that. Like, I'd rather live off that and never actually touch my actual principal. So my goal is like, yeah, I'll have all the 401ks and all that good stuff still working, but my option selling portfolio, that's going to be the thing that writes me my paycheck on a weekly or monthly basis, depending on how much time I actually want to commit to this. So for me, I like to be personally around like that 2%, at least where I'm at right now. But I can tell you when I'm older and I'm doing this with a much larger portfolio, you know, when you're not going to listen, if you're running this with a $5 million, you know, $10 million portfolio, you're not, I mean, who knows? I'm just telling you, I'm not going to be trying to go for like 3-4% a month. Like that's insanity. The risk of that is insane, right? Like I just, again, do what you want. This is just, I'm just telling you what I personally plan to do. Next one is setting your days to expiration. This largely, honestly, is going to come down to your lifestyle, to be honest, right? Weeklies, you know, you're going to be more active. You're going to have, you know, more engagement with your portfolio. And there's, of course, higher risk, right? Because it's a shorter time frame, right? Time is an option seller's best friend. Now, because it's higher risk, you get more premiums, more trades throughout the month, right? Obviously, monthlies, less stress, and they're a little bit more consistent, I would say, right? You know, you're getting better deltas. Maybe you're not getting, you know, you're getting better strikes, right? Maybe you're not getting as much premium or losing out a little bit on that ROI and collateral. But like for me, like let's say I have like a busy, you know, week coming up, right? Like I know I'm not going to be trading a lot next week, right? I'm doing this AI conference thing, right? So like for me, I'm like, I'm not going to be trading a lot next week. I'm going to be busy. So like, why would I do weeklies? Like for next week, like, and I would be planning that out in my brain, right? Like a week or two before, I'm like, oh, I got this thing planned coming up. Let me just do monthly. So, you know, I don't even have to check anything because I'm not checking anyway, guys. Like I'm not living. I'm living in it a little bit more than the average individual. Most people let everything go to expiration. Nothing wrong with that. So with expiration, I think the more important question is what fits into your lifestyle, not necessarily like, hey, what's the ideal? Because the ideal usually is going to be like, oh, in a perfect world, running weeklies, right? Because you're gonna have more ROI on your collateral. You just are. Now, of course, that comes down to what stocks you're picking, how aggressive you want to be. I mean, there's a slew of things, right? But with that said, have an exit plan. What is your exit plan, right? What will you do if you're assigned? Well, you're going to roll it, buy it, let it go. You have to think through things, right? A lot of people will do their cash and puts. They'll have like an insane ROI, and then it's like they're freaking out and as like, oh, I'm getting assigned. Oh, man, what do I do? What do I do? Well, what was your original plan? Your original plan was you said you were comfortable owning those shares at that price. Now, what happened to your belief? What happened to your conviction? What happened to the company? I don't allow myself to be put in those situations anymore, guys. I generally don't because I want to be able to sleep at night. I don't want to like have this fear of assignment. And you only have fear of assignment when you don't stick to your plan and you got into something that you shouldn't have got in with. And listen, we all make mistakes. We all get into stupid stocks that we hold on. And guess what? When I sometimes look at my portfolio, I'm like that 100 stocks that just like basically is at zero. I can't even do cover calls. I'm like, that's a reminder. That's a reminder of not making stupid mistakes anymore. And that's just me, because I know some of you guys will be like, that's just stupid. Like doing, you know, you're only getting a 0.3% a week on your collateral. But that's just that for me, that's what works. I'd rather it be less stress and knowing that I'm sticking to a plan that I set forth for myself. And and some of you guys that know me, and especially in our mastermind group, like, you know, I'm not taking unnecessary risks anymore. It's boring. I don't trade a lot, but guess what? It is what it is. And it works for me, works for my lifestyle, and helps me sleep at night. Okay. And then a quick little bonus. Listen, you don't have to do this part, but it's recommended. Okay. It takes your option selling to a little bit to the next level. Keep up to date on your watch list earnings. Like, what are the Fed announcements? Like, these things move markets. They just do, especially with the way especially with the administration right now. Everything's a tweet away. It's fantastic, right? I love it, right? The premiums we're collecting, the way we're able to get in and out of stocks, well, cash rewards, cover calls. I've never lived during a time, right, where I'm selling options and it's so active. right? It's crazy. But for us, it's really good, right? It's actually really good, right? We have so much more volatility in the markets, right? Obviously, with that volatility comes those juicier premiums, but with the juicier premiums comes a lot of risk. So guys, if you want this full checklist for yourself, you guys can download this, use it for yourself, add things to it, drop a comment down below in today's video. Make sure to click that first link in the description of today's video. You'll get my full live premium tracker, and I will be updating this, obviously, as I add more trades, and you can make it your own. That's the goal with this stuff, guys. Like, go use this stuff. Give us a little bit of time. If you're not toxic, you're financially stable, and you want to learn about our amazing Ark Options Strategy, our mastermind group, and mentorship, click the first link in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.